Good evening. Investors all over the world are holding their breath tonight, wondering what will happen when stock markets open again tomorrow. The twin problems of an American debt downgrade and the accelerating European debt crisis sent markets plunging today, with both the TSX and the Dow losing hundreds of points. Kristen Robinson has more.
Monday morning on Wall Street, it took just seconds for the markets to react to the U.S.'s first ever debt downgrade. And the result wasn't pretty.
I think the reality of the downgrade still hurts and still bites.
Stocks plummeted, prompting a major sell-off. The Dow in New York has now lost 10% of its value in the last 2 weeks.
270.
Monday's losses were bad, but far short of the catastrophic free falls of the financial crisis 3 years ago. For the first time since Standard & Poor's cut the long-term credit rating by one notch Friday, the U.S. president appeared publicly, offering reassurance.
Markets will rise and fall, but this is the United States of America. No matter what some agency may say, we've always been and always will be a AAA country.
Obama says his country will recover from the dysfunction in Congress, which prompted the ratings agency to reduce the U.S.'s AAA to AA+.
My hope is that Friday's news will give us a renewed sense of urgency. I intend to present my own recommendations over the coming weeks on how we should proceed.
Meantime, losses on the North American markets continued amid concerns about soaring debt in both the U.S. and Europe. For the first time, the price of gold soared past $1,700 U.S. an ounce as investors sought safety in the metal.
Now that we're in the situation that we're in, with we're down at AA+, we're going to be looking for the actual goods to be delivered.
To avert financial panic, G20 nations pledged to take all necessary initiatives to shield the global economy from a slump in investor confidence.
In Canada, we're not calling for a second recession or a double dip in the economy, but we are looking at an economy that's maybe a little slower than we had originally expected.
It's not the market that it used to be, and I don't think it will be for quite some time.
In Victoria, tourism officials know the impact of the U.S.'s recessionary times well. Despite an overall 5% decrease in visitation and spending, a $48.5 million hit to the local economy, they've seen increased visits from Seattle in the last 10 months.
Yeah, sadly, I think that we've gone through this before. We've taken our battle scars, we've learned our lessons, and I think with some focus in the Washington State market, some value-add propositions.
Tourism Victoria plans to offset any troubles by luring Americans who have the desire, ability, and confidence to travel.